Shell has denied a report by the Wall Street Journal that it's in early talks to acquire UK rival BP. Speculation of a deal sent New York listed shares of BP more than 10% higher before falling back. In a statement, Shell said no talks are taking place and that the company is sharply focused on capturing the value in Shell through continuing to focus on performance, discipline and simplification. BP has underperformed Shell and US rivals in recent years, fueling speculation the British oil major could be an acquisition target. Well, BP currently has a market cap of around $80 billion. If Shell acquired the British oil major, it would be the largest deal in the industry since the 1990s, and Exxon's massive buyout of Mobil for $83 billion. Now, according to people speaking to Brian Sullivan, CNBC's Brian Sullivan, it's unlikely Shell would purchase all of BP, and more likely it would be split and sold into pieces in multiple companies. But, you know, for the moment, unless someone else comes in or something materially changes, Shell's out of the game. They put out an official stock exchange statement, which means they're out for 6 months unless things materially change. So back in April, we spoke to the BP CEO, Murray Auchincloss, and asked whether he considered the company a takeover target.
I'm not going to speculate on that. What I will say is we're a strong independent company and we've got sector-leading growth. And if we can deliver the sector-leading growth, and the first quarter is a fantastic example of that, then I have no concerns. I think we're going to do great.
Speaking to CNBC just last week at the Energy Asia conference, Shell CEO Wael Sawan downplayed M&A questions, saying the company's focused on share buybacks and improving its financial performance.
For the last couple of years, what we have really focused on is creating the best version of our own company. And we've been very heavy on share buybacks. So we've had now 14 quarters in a row of buying back over $3 billion of our shares every quarter. We continue to see significant value locked into the Shell shares, and in particular we look at something like free cash flow yield, where we are very much an attractive buy. And so when we look at that marginal dollar of investment, we compare M&A with the potential to buy back shares, and we continue to favor our own shares. That doesn't mean that we don't look at M&A opportunities, but we have a very high bar for those opportunities and continue to believe that that dollar is better spent in our own share.